Okay, on today's show, 3 questions. Number 1, who's cutting rates first? Number 2, what does it really mean to be wealthy? And number 3, are you ready for tax day? Let's go. Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Victoria.
And I'm Robbie.
And we are now 4 weeks in a row, people. It is inevitable at this point. People are going to get tired of this combo. I guess you, because it's always Robbie and me. So maybe
I know.
you.
If we start losing listeners, we'll know why.
We're tracking the data, and we know it just happens to work out this way, or has, because we've just had some weird things, like Jake and Taylor are traveling. We had spring break. Everybody was gone pretty much, except for us 3. We don't do anything except for podcasts.
We're the losers that are in the office.
Here we are. Yeah, exactly. We're the idiots that come to the office every day. So anyway, good to be here. Robbie, you're not in the office. You are expanding your mind in your master's program. But good to have everybody here. Let's just jump right in. Number 1, Robbie, who's cutting rates first?
It's the question of the week, because we had I'd say a volatile week in the US market. While the S&P 500 is kind of flat, we've had some big moves throughout the day, like closing the day up 1.5%, down 0.8%. It's been more volatile than what we've encountered this year so far in 2024. And coincidentally, last week we were talking about the Central Bank of China and how they have been hoarding gold, and they've been the main reason for why gold prices have been going up. And I was like, let me look at central bank or economic indicators and see what central banks around the world might be doing now. And we know since COVID, we've had this inflation dilemma all across the world. And unlike, China or Japan, who they have their own specific problems, most of the countries actually had to deal with inflation. They had to raise interest rates. And now, as it's easing, they are deciding when to cut interest rates. So let's take a deep dive into actual economic indicators from certain regions of the world. So
this is my favorite. I love the deep dives into deep economic data. It's my favorite.
It's a tongue twister too.
Yeah.
Okay. So just to give you a little bit of reference, in the US, let's talk about the unemployment rate, talk about inflation, and talk about where interest rates are. And all of this is a little bit of an naive analysis, because we're looking at what they call the Phillips curve, which is the trade-off between unemployment and inflation. When you have high unemployment, you're probably in a recession, you will not have inflation. When you have high inflation, you're probably in a booming economy and you do not have a lot of unemployment. There's this inverse relationship between those two, and it is kind of dominant for a good period of time. It breaks down every once in a while, like in the 70s, but let's just use it as our framework for now. So looking at US data, the unemployment pre-pandemic, where we were, was at 3%. I'm talking about like February 2020. We were at 3%. And unemployment now is at 3.8, and it's been flat for the last 2 weeks, also contributing for why the US stock market has been, on its tiptoes. Regarding CPI, this is going to be our indicator for inflation. The CPI at its highest level when, inflation hit in 2021, 2022 in the US reached all the way to 9.1%. And as a result of the Federal Reserve increasing interest rates, it is now at 3.5. And our current interest rates in the US are 5.5%. And the Fed has communicated that they're going to be cutting interest rates 3 times this year. However, with recent reports in the last 3 weeks, whether it was inflation rate stuck at 3.8% now lately, 3.5%, my bad, and unemployment rate stuck at 3.8%.
They're teetering a little bit, aren't they?
Yeah. They slowed down. They've been flat for the last 3 months. Both of these two indicators, even the market is now only pricing in 2 cuts from the Fed, and we're like, okay, given this information, where do we think the Fed is going to cut in June, or will they not cut in June? So the other 2 economic regions that I found the most similar to the US are the Europe, measured by the data the European central banks look at. So it's all of Europe, except Britain in a sense, and Canada, which because their economy is very similar to ours. So the same story with the European Central Bank. The unemployment in 2020, right before COVID hit, was at 7.2%. And I'm just going to give you some background information. Unemployment rates in places outside the US, like Canada and Europe, actually are, their base level is higher. Our base level is like 3.5. Over there, their base level is around like 5 and 6. And simply because of the different governing regimes they have, the different social safety nets that they have, people might, and you know how efficient their labor market is, it actually has implications on like how low the natural rate of unemployment can be. So for Europe in the pre-pandemic, it was 7.2. And now, because we're all dealing with the inflation, their unemployment had dropped to 6.5%. Their CPI at the highest point during 2022 reached 10.6%, but now it dropped all the way down to 2.4. And the interest rates employed by the US Federal Reserve, the European Central Bank, and the Bank of Canada, the Canadian Central Bank, are all the same. All the rates moved from 0 to 5.5%. And now between these three, it's a matter of like who's going to be cutting interest rates first. For Canada, unemployment was 5.5. Unemployment now is 6.1. So unlike Europe, where it dropped, now it has increased. Their CPI didn't rise all the way to 10. It rose to 8.7. And their CPI right now is 2.8. So in summary, Canada didn't had higher unemployment rate, has a higher unemployment rate right now, and their inflation is very low, which means they are on a closer brink to a recession. Europe has a lower unemployment, which shows that their economy is stronger than it was growth-wise. However, also their inflation is going down and going down too fast, which would trigger them to want to cut interest rates. While the US, their unemployment rate never changed, and inflation, while it has dropped, it hasn't dropped as much as it has dropped in Europe and in Canada. So what is going to be? Actually, just earlier this week as well, the European Central Bank chairman communicated that they are still going to be cutting interest rates 25 basis points in June. Canada is also, Europe is doing it out of not trying to prevent the economy from slowing down. Canada is doing it just because they think their economy is already starting to slow down and they want it to
get ahead of it.
And the US, just because their inflation did not drop down to the 2% like it did with the other counterparts we're talking about, is they're sitting and thinking, maybe we should leave it a little bit more longer. And just because American consumer has been consuming much more than the European and the Canadian, there were other macroeconomic factors that kept inflation a little bit elevated. So who's going to be cutting interest rates earlier? Given the data that we received last week and, you know, the macroeconomic situation in each of these three economic zones that we looked at, we would expect Canada and then the EU and then the US, which actually has an implications short-term, not long-term, short-term implications on a globally diversified portfolio. Because when interest rates are at a differential, they're not equal at the same level, currencies would adjust to remove any arbitrage opportunities. Because you can borrow in the country where interest rates are lower and go invest it in the country where interest rates are higher. So currencies actually change to allow you to be equal wherever you want to go borrow and invest. So, and this is definitely in free-flowing, unrestricted economic regimes. We're talking like EU, Canada, and the US. So in that sense, the Fed might not be the fastest to cut interest rates, which means the dollar would be stronger because you would want to convert your money from, you know, the euro or from the Canadian dollar to the US dollar to invest. The dollar would increase. And this would mean that if you are a globally diversified investor with an unhedged exposure to developed markets, especially these two regions we're talking about, their equity return translated back to your local currency might be a little bit lower. But over the long run, this should not be the case because the US has been in a trend where the US dollar has been just weakening as we go, due to the fact that the US economy is the leader in terms of technology, and this is deflationary in nature. And just as long as the US is the powerhouse of technology and innovation, we would expect the US dollar over the long run to keep depreciating. So this is like slight upswing in currency. It's good to be aware of. If the investment horizon is still longer in terms of equities, it's nothing to worry about, but it's something on the radar.
So it sounds like, Robbie, to summarize that, the EU and Canada seem to have maybe a bit more pressure, like to be making a move on rates based on their CPI dropping much lower than the US. Like there's more signs there that there's maybe economic issues or slowdown compared to the US. It seems like the US, their Fed Powell and his group, it seems like they've had a let's wait and see approach for quite a while now. Is there some aspect to that here even? Do you think, I guess the question is, is there a little bit of chicken going on, or is there not even happening where, because I'd imagine there's impact when one group, like you said, lowers, there's impact across the globe, I would imagine. Is there some aspect of like maybe Fed Powell kind of being like, let's just kind of wait and see what the EU does, or let's see what Canada does, or does that not even factor in, you think?
It might, and when we're only talking about a difference of like two months between them cutting versus the US start cutting, I don't think it would have repercussions. But let's go on a tangent here and think like, oh, inflation is extreme, it's not going up, it's actually starting to ticking back up again, and you see Europe is already slowing down where the US isn't. The fact that the monetary policy internationally is not coordinated between central banks, the fight against inflation weaker. Like a really good reason for why inflation got tamed this quickly in like a year and a half without the anchoring of expectations, et cetera, is because as the US central bank, the Federal Reserve, was increasing interest rates, they actually coordinated with other central banks and provided them with currency swaps, because if they decide to increase interest rates as well, it doesn't cause turbulence in global currencies across the world, which did not happen in Japan, by the way. And that's why the Japanese currency is at the lowest vis-a-vis the dollar, because that coordination wasn't happening. So it's going to be fluctuation. Can I say objectively it's going to be good or bad for this type of investor? No. But you will, like, if movements start showing up, you'll see, oh, this is why movement is happening. This is why currencies are different. This is why the local return versus the hedge return is different, et cetera, et cetera, et cetera.
Got it. I'm also realizing I keep calling him Fed Powell, which is not a thing. It's actually Chairman Powell, it's Chairman of the Fed.
Hey, speak for yourself. That's what I call him. He and I are pals.
Yeah, I'm not calling him Fred Powell.
Just call him Jerome.
Yeah, just Jerome, my boy Jay Powell. So, okay, that's really interesting. So it does seem like, to kind of put a bow on this, it does seem like everything I'm seeing too, Robbie, and what you've highlighted is the U.S. is kind of seemingly backing off the idea of cutting rates. Like it started off even end of last year going into this year, there was up to like 5 cuts they were talking about.
So the Fed has always communicated 3 cuts. At the
they've
beginning
always
of
committed 3.
They've always communicated 3. They did not change
pricing
their
in
mind.
more.
The market, given the economic data, was like, oh no, this is so good, it should actually be 5 cuts this year. And now as inflation is lingering longer, as unemployment is stuck at 3.8%, the market's like, do they really need to cut as long as everything's going sideways? Maybe we'll price into. So
Got it. Okay.
We will see on May 1st or 5th when the Federal Reserve meets what
we'll
they're
know
going to
more.
tell us. Yeah.
Teaser. My favorite.
Soft launch.
Okay, cool. That's awesome. Hey, Robbie, any final thoughts on that at all? Okay. Awesome. We will wait to see who cuts rates first. I'm going to put my bet on Europe. Let's go. Bet.
Canada.
Yeah. Oh, okay. Never mind Canada. Robbie said Canada, so I'm going with Canada.
Just kidding. Canada.
Never mind. I totally meant Canada. You guys heard Europe? Sorry. I struggle with geography. I'm sorry. I meant Canada.
The kid that's like looking over at Robbie's desk to see
what does Robbie say?
A, B, or C.
Yeah. What? Robbie. My answer is Robbie. Okay, cool.
Always Robbie.
Always Robbie. Victoria, what does it mean? Yes. What does it really mean to be wealthy? Tell us.
Well,
and you withheld. You wouldn't tell us anything about this, so I'm excited.
No, I'm trying to be a little mysterious for this one because I want you guys to guess some things. It was so I didn't realize this, but Schwab does a study every single year on modern wealth. So they released theirs for 2023, and they covered, I think, like 9 different topics or kind of general questions they were asking folks. So I kind of just wanted to share that with everybody. So because Robbie's on here, I always have to like back this up and say it's legit, blah, blah, blah. So yes, it's by Schwab, Robbie. And there
This is real, Robbie.
Yeah, I do this mostly because Robbie will come after me if he doubts that I didn't
It's
get
good.
a
He
good
pressure
study.
tests it. Yeah.
I know. I kind of sweat a little bit.
Accountability is one of our values. So
I know.
let's go.
I guess that's a nice way of calling us friends. So this study done by Schwab, they surveyed 1,000 adults between ages 21 and 75. I think like 200 of them were Gen Zers. So nice spread of different demographics there for you, Robbie. So it's legit. Okay. All right. Now that we've established that, let's hit these. So I think there's about 9 of them. So the first topic they hit is the questions they asked folks are at what level of personal net worth would you say somebody is to be considered wealthy in America? Any guesses for you two? This is net worth, not income.
So
Or
you're
what
saying
age?
what do I think they said?
Yeah, what would you guys think? Like, or what would you think? What would you think they thought? That was a really weird way of saying that.
So
either way,
I guess I will say to the question, like, what do I think the surveyor said is wealthy in America for net worth?
sure.
I would say people probably default to like $1 million. Like I would imagine that's somewhere in that range. That's what people would say.
Okay, Robbie.
We're averaging out like all age groups, right? I'd say like 700,000.
Okay. So survey found our people said 2.2 million in America is what they considered someone to be wealthy. I think there was a range, and that's kind of what the average was. Oh yeah, nod, Robbie, like you knew that. But what was really
Robbie was actually sitting there being like, man, that low? That's crazy.
Well, so here's what's interesting. When people feel wealthy, they actually have a lot, significantly lower net worth. For people, so the average net worth of those who feel wealthy is actually $560K.
Oh, got it. Okay, so you're kind of projecting. You're like, I think they're wealthy at 2.2 million.
Yep.
But I'm wealthy at 500.
Yeah. So the questions were, at what level of personal net worth would you say a person in your area could be considered wealthy? Then they asked overall, how wealthy do you feel today? And then they asked for what are your total assets, including like retirement funds, but not including any real estate.
Oh, interesting.
Yeah. So I guess the message from that is you don't need as much wealth or money as you think to feel wealthy. It is kind of subjective, right? Like, I guess I could decide to feel wealthy right now.
It's all relative, right? It's all relative.
Yeah. Okay. What generation do you guys think feels the wealthiest today?
Boomers. Because they are.
Yeah.
It's actually millennials.
They have all the money. Oh, wow. Millennials.
Millennials feel the wealthiest for some reason. So 57% of millennials, and then it's actually Gen Z, then it's boomers. Or no, sorry. Millennials, Gen Z, Gen X, then boomers.
So boomers are last.
Yeah, they don't feel very wealthy.
Freaking crotchety old farts over there struggling.
Wow, so you call Gen Zers soft, and then you go after boomers, man.
Yeah. You want to know what millennials are?
Perfect.
Amazing.
We're so cool.
The best.
Yeah. Okay, next. The next question they had is, being wealthy can mean different things to different people. What does being wealthy mean to you? So for most people, it actually was well-being above money.
Nice.
Which I was kind of surprised about. Maybe I just have a jaded view of society, but I would think like people think, oh, wealthy money, like that's what a wealthy life is. But it's well-being. People are valuing that.
I also do wonder in surveys like this, like how real are you getting with these? Like, how honest are people being with answers? Yep. I feel like sometimes with this or personality quizzes or whatever, people answer how they think they should versus how they actually feel.
Yeah.
Right? Especially with stuff like that. But it's just, I don't know.
Yeah, it's going to make me seem more amazing if I'm like, oh, yeah, I so much rather have physical wealth than actual wealth. I don't know.
Totally. Yeah.
Fair enough. I mean, we can just move on then. We can.
No, I'm not saying we're moving on. I was just saying with that particular question, like I do wonder, people that say well-being over wealth, like, do they really mean that? Like that, I feel like that for sure.
Yeah.
But I am curious to know like how, if really pressed on that, if that would be the case. No, I don't think we should move on. This is interesting.
Yeah, I mean, I guess, so they do this study every single year, and there was one that they did actually where they surveyed the same people in like 2009 and then 2019, and they kind of asked some of this stuff. So maybe I'll bring that study to life at some point.
For sure.
Okay, so this next subject goes kind of deeper into that, and they were asking like what questions that you agree with, and a lot of them were like non-monetary versus monetary. So it's like having a fulfilling personal life or working on my career, not having to stress over money versus having more money than most people I know. And from this study, and kind of to your point, Matt, I wonder like how true this all is, but a lot of the non-monetary things are like enjoying experiences, having a healthy work-life balance, being generous with loved ones now. And then the other side of it was being successful, having a lot of money, having a higher salary. And most folks are valuing the non-monetary statements, which I think is interesting because I agree with that personally, but I do feel like I anecdotally hear a lot of like value around like monetary statements.
Yeah, this is actually really interesting because I do think most people you ask, because we even experience this, right? I think most people, if you ask these questions, most people would turn to this non-monetary stuff. But then it's like, but show me how are your actions aligning with that? I think that's the key. Is, are you actually acting in accordance with what you are saying? And this is for me too, by the way. Like I need to be, it's like one of those things you got to take a step back sometimes and be like, okay, this is what you're saying. It's like what we do with clients sometimes, like do these, we call discovery calls or values exercises. Sure. It's like, but are you actually acting in accordance with that? Kind of the whole saying, like, show me your checkbook, I'll show you what you value.
Yeah.
Like it's kind of like, show me how you act. Don't tell me what you think is important.
Yeah, and I feel like we've been having conversations about this a lot lately in the office around like the influence of media and social media, and we'll get to that. The study talks about it a little bit, but I feel like I wonder if this is actually what people believe. They want a fulfilling life and all of that, and then external forces come in and they're like, no, you're actually miserable. You need this product to make you feel a certain way, or getting into the comparison game and all of that. So I feel like that's what it probably is. Like people actually value time. And that's actually the next topic that they show is that.
But hang on, Robbie's smirking. Oh. He has comments on this.
Okay.
No, I'm just thinking when Matt said, show me your checkbook, I'll tell you what I value. And
for that's Robbie values skis.
Yeah. Congratulations. We're so proud of you.
A new skier is born.
A new skier is born. And an angel got its wings.
An angel got its skis.
Yeah, an angel got its skis.
You guys made me forget my point.
Sorry, Robbie.
Oh, yeah. So Matt was saying, show me your checkbook, I'll tell you what you value. And the people in Victoria, the study Victoria's talking about, is that they said they value the non-monetary things, spending time with family, et cetera, But then there's a statistic that I can't get out of my mind that Americans are the most overworked people in the developed world.
Yes.
And I'm like, if we look at the data, no, Americans really love making money more than spending time with family or going out and finding experiences, which,
But I'm curious, like, what drives that? Is it like, is this what you actually want? Or is it like we're just heavily influenced because we've never been more connected than we are today by social media? And you can just see way more out there in the world than you ever have been able to. And so I'm just curious, like, what really drives that? Is that internal or is that an external driver?
Yeah, I don't know. It's a great question. And it's a great point by Robbie that if you just look generally speaking with America, we're more consumer driven. Like there's more consumerism and work kind of hustle culture more than anything in America. So, but to your question, Victoria, I don't know. I think what you're talking about with the status chasing and comparison and social media, all this stuff, I think it's easy to, like, for example, I think it's easy when you ask these questions in a survey, or even when we do this with clients, right? We have these moments of like, I just had one today, right? Sat down with a client. We had an hour-long conversation, what we call the discovery call, right? Where we start asking all these questions about importance of money and values and all this stuff. I think it's like, in those moments of clarity, those moments of like pausing and being like, when someone's actually asking you these questions, I think people are honest at like what they want, but then I think they go out into the world and then they're just bombarded with things of what they think they should want, or what things are forced upon them. Right.
Mm-hmm.
So I don't know. I think it's probably just very difficult in the ecosystem we live in today to not get caught up in it.
Yeah, I agree. Okay. Moving forward, I mean, this is along the same vein, but 61% of people value having time, 39% value having money. Boomers are the ones that want more time than all the other generations.
Makes sense.
Makes sense. They're probably sick and tired of working. Okay. The next one was actually about financial planning. So you guys will like this one. So about a third of Americans have a documented financial plan, and those who do feel a lot more in control of their finances. So 35%. And then of those folks, 92% feel confident that they'll reach their financial goals. So, I mean, we always have this data that like having a plan in place, having clarity around your finances makes you feel more confident. Even if you're not where you want to be, the data backs this time and time again, that just getting a blueprint, figuring out where you want to go, and taking steps to make that happen actually makes you feel like you're in the driver's seat of your finances. So thank you, Schwab, for proving our point.
Thank you for plugging our services for us.
Yeah, but 65% of people don't have any formal financial plan. Even less have like thought about it, and 26% have never thought about it. So
yeah, it's not shocking at all, and it's also seems pretty intuitive that those who have thought about it and got organized and got something in place feel more in control. I think that makes a lot of sense.
Yep. So barriers. So why aren't people getting financial plans? Curious, do you guys have any thoughts? Like why you think people don't get an advisor or have a financial plan? Matt, you should probably be able to guess at least one of these.
There's multiple reasons.
Like there's reasons for like people's reasons for not getting a financial plan or working with an advisor.
I mean, I'd imagine one of them is they're intimidated or scared or think it's too expensive, or think they're going to get sold something.
Yeah, it's I don't have enough money, or my life's not complicated enough.
Got it.
Yeah, and I feel like I hear that quite a bit. Like, oh, like I don't have enough of investments. Like I need to like have more in my brokerage account before I talk to an advisor, and that's no, that's simply not the case.
It's like I need to get in shape before I go see a personal trainer. Totally,
right?
That makes sense.
It makes no sense.
But actually, it might apply to most financial advisors. And here I'm just highlighting because I saw it firsthand. I don't do financial planning as much, the advisors or the veterans here. I'm doing the investments. And I noticed that we do financial planning a little bit differently at Dentist Advisors. Other firms, it's just you go to an advisor and they just, if you have money, they'll invest it for you and complicate your life and make you feel like you're in something that's going to generate alpha, right? Whereas over here, we're looking like at financial vitals and, looking at your financial health in a sense. And when the advisors are talking with our clients, I don't feel like it's as if, oh, if I have money, I can afford it. It's the equivalent of going and getting a checkup with your doctor. Whether you have money or not, you go and get a blood test just to know where you stand, see if you're on the right path. But I guess we're the outlier here because other financial firms don't do it that way. I think we should highlight that because, I was honestly surprised when I joined how we do financial planning differently here, and I ascribe to it.
Yeah, it's a good point, Robbie. And even beyond that too, even like we're talking about how we get into the details with clients a lot of times around, again, their values, their concerns, like their life plan, their career plan. It goes well beyond just like, hey, let's set up a brokerage account and start investing money. So totally with you how different it is, how we do it. And we're not saying we're the only ones that do it different. There's a lot of great groups out there, but we definitely pride ourselves on that, of doing it differently.
Yeah, that's a good call out, Robbie, because that's the world I came from. Like my whole approach to financial planning as like a general advisor was giving people the likelihood they could retire at a certain age. Which that's so silly to tell like a 30-year-old like that, you know, if you stayed the course like for 30 years and your life never changes, this is your likelihood to retire at 60, 65. And like, that's not helpful. So I really do like our approach of more of like, these are your vitals and how healthy you are right now. Like that's a lot more helpful to somebody who's earlier in their career and, you know, mid-career than like, oh, this is how likely you'll be able to like stop working at a certain age. Like that's not really helpful at all.
So true.
Okay, so last couple that we'll hit here. Oh, you guys will like this one. Americans value their relationships with family and friends, but how they compare to family and friends impacts how wealthy they feel. Right? This makes sense.
Totally makes sense.
So let's see, 47% of people say being able to afford a similar lifestyle as my friends, makes me feel wealthy. Compared to, let's see, 37%, I compare my lifestyle to my friends and family, my families and friends on social media. So people are comparing themselves and tying that to their feelings of wealth, right?
Oh yeah. I bet the poorest person in the Hamptons feels worse than the richest person in an average neighborhood.
Yeah.
Like, it's just how it goes. Like, wealth is just, it's relative. And this is why, again, because we tie so much of it to status, I think we play an unwinnable game here with a lot of this stuff.
Right. And I mean, it's hard not to compare. So I don't like, you know, want to badger people for comparing themselves. I think that's...
Was I badgering?
No. Why are you making this about you?
Oh my gosh. Okay.
I'm just saying, like, I don't fault people. Like, we all do it. Like, you know, I compare myself to Robbie every single day and I feel awful about myself.
I can't even be around Robbie.
I know.
Usually. Yeah.
How am I the devil in this?
No, I'm saying you're better than us.
Because you're better than us, Robbie.
God.
Yeah.
We can't handle it. But really, no, I don't blame people. Like it's really natural to do that. But I think where it becomes detrimental is if you're tying it back to your self-worth and changing your lifestyle based on external forces. And I really feel like this all just needs to be internally driven and doing like looking at your own goals, your own values, so you don't feel the need to really compare yourself, because that sucks. Like that's a game you can't win.
Yeah. It's so true, Victoria. And again, truly, we hold nothing but empathy for people that do this, because we all do this, to your point. It's a very natural thing to do. Humans have thrived off of status. That's how, in some ways, you could argue that is how we have gotten to where we are, is because of chasing status, and leads to things like innovation and continuing to make progress. So you got to take the good with the bad sometimes. So, okay. Was there anything else on those? Any more?
The last one is just like statements, people saying like they follow influencers who share financial advice on social media, and that their ideas of wealth are largely influenced by what they see on social media. So just
which makes sense. Which
social
makes
media
sense.
is powerful.
Very powerful. Either can be good and bad. Robbie, any final thoughts on that? Okay, cool. Study buddy, as always, bringing the studies and the good insight. We are going to finish up here with the most exciting topic maybe we've ever done. Comes around every year, tax day. In fact, this episode might be coming out on tax day. I think it is. So happy tax day, everybody.
Happy tax day.
Happy freaking tax day. I don't think that's kind of an oxymoron. But I wanted to hit it. I just thought it was kind of, I used the word fun very loosely, but kind of fun to hit some tax day facts. And we'll go through these really quick just to keep it close to time here. So April 15th, tax filing deadline for most people. Outside of, I just read an article though that said we have close to 20 million people this year are filing extensions. That is a record. We've never had that many. Its average is right around 11 or 12 million. So for some reason,
wow.
we've got a lot more. I don't really know why, but about 20 million Americans or tax filers are going to be filing extensions. We're going to play a little bit of a guessing game. Speaking of tax filers, how many individual income tax returns are expected to be filed in 2024?
Let's see. 300 million Americans. A good chunk of us are married. Like, oh yeah, good chunk are married.
Individual income tax returns.
Individual. So are we counting marriage, filing jointly?
Well, like filing jointly is like one, right?
Yeah, well, I think it's just filing jointly. Yeah, so individual.
I'll say 120
well, it says
million.
individual, but I think just tax. Just say 1040s.
120 million.
175.
146.
Oh,
146 million tax returns being filed in 2024. I don't know why this is even a fact, but it's there. In fact, seems kind of low to me. 92% of returns are filed electronically. Who is filing anything but electronic?
Who is 8%?
Who are the 8%?
I didn't know that you could still do that.
I didn't even know you could do that, but that's amazing to me. That actually
is mail it in?
Quite low. Yeah. It says 6 reasons to e-file. It should just be 1. It's 2024. File your return online. Sorry.
146 million people.
So
and 8%.
Yep. Go ahead. Do the math.
Okay. So that's like almost 12 million people who are like pen to paper.
That's wild.
Mail this in. Like, I'd have to Google how to address an envelope at this point.
That is wild.
Dang.
I do wonder, and now I'm going to backtrack a little bit. It could be a lot of, it doesn't differentiate, but my guess is CPAs might be doing a lot of paper. I actually don't know this, but they might be, depending on how complicated it is. Anyway, okay. The average tax, the average tax refund as of February 23rd, 2024. You guys, the average refund for 2023 taxes. Robbie's like, no, I would have no idea either.
$500.
That's what I was gonna guess. $500.
$3,213.
Dang it.
Is the average refund.
Huh.
I'll skip a couple of these. Some of these are kind of boring. Okay. This was interesting. I thought 65% of Americans saw their taxes decline due to the overhaul in tax laws of the last few years. But 74% of Americans say the cuts have not helped them financially.
Oh.
So there you go. Interesting.
People want more money.
Yeah. Over 10,000 warning letters have gone out from the IRS to taxpayers with their use of cryptocurrency. So, and this is every year since 2019, over 10,000 letters go out, warning letters, they call them.
For crypto, like why?
For crypto. So I think a lot of this has been because of the unregulated market of crypto. They're trying to get better with this, but because it's so less unregulated and there's so many platforms and so many different cryptocurrencies, it's been easier for people to hide stuff from the U.S. or from the government. And so the U.S. the IRS has tried to crack more down on this to get people who are, getting these gains in their crypto accounts, but not paying taxes on it.
Oh,
government wants that money.
Yep. They think they're smart.
Yep.
People
this was crazy.
doing
I'll hit just a couple more of these. I gave it away. 6.55 billion with a B hours of time spent from Americans preparing their tax returns.
Does it say per person, the average?
Just total. So total time, 6.55 billion hours spent.
Hold on, we said 170 would be filing?
Yeah, I think they said 13, average of 13 hours spent filing a tax return is what they broke it down to.
That's insane, because when you do it on TurboTax.
Was that about right, Robbie? Did that come out right?
I didn't do them.
Oh, okay. So this broke it down by filer. So this says about average of 13 hours spent filing a tax return. So just to give the reference point, 22 million hours went into constructing the world's tallest building in Dubai. So that just gives you a little reference point there.
That's insane. Why is it so high? Like, are people just bad at it?
And I wonder if they're probably talking about, I'm guessing they're referring to CPAs as well, like total hours spent, I'd imagine.
Yeah, probably. Took me a whopping 28 minutes.
Yeah. That's
TurboTax tells you.
Yeah, my stuff's relatively basic too, so it doesn't take me too much time. Okay, $224 billion of total cost burden to the IRS just for paperwork.
That's
$224 billion.
Those 8%, man. Those
Yeah.
8%.
Yeah, that's
Causing
7%
so
more
much
than
work.
last year. Okay, let's end with a couple of these that I think would be more interesting, especially for dentists. So this is all, we'll finish with this of audits and enforcement. So 708,000 tax returns get audited roughly by the IRS each year. That is a 0.2% audit rate. So, 0.2% chance you will be audited by the IRS. So,
But if you do,
but if you do,
we always have to say that.
yeah, but if you do, exactly. So audit rate is pretty low.
Yeah.
Anyway, there's different types of audits. We don't need to go into that. So anyway, I thought it was kind of interesting to hit a couple of these things for tax day. The biggest thing that I thought was interesting was that number one, the amount of hours and the amount of money spent on taxes, $250 billion in just paperwork costs for taxes. It's kind of wild. So
all the trees. Did they have a stat on that?
Trees. Yeah.
How many trees had to die?
I know, right? So
to get this filed.
Yeah, the last one here that they also list, and we did a podcast on this. It's coming out here pretty soon on the Dirty Dozen. So the IRS releases the Dirty Dozen every single year of tax scams, and one of the top one, this is very pertinent to dentists, is ERC. So the ERC, the Employee Retention Tax Credit, the IRS is cracking down on this massively. They're saying they have projected somewhere in the range of $2.9 billion in potentially fraudulent ERC claims, and they are coming after it. So just maybe something to keep in mind as well. So any thoughts on that, on tax day? Happy tax day, everybody.
Oh, such a celebratory day.
It's a holiday. It basically is. So
we should take it off.
Yeah, we should. Let's do it. CPAs are, I'm sure.
Taxes, I guess the closing message is there's only a 0.2% chance you get audited. So like, why even bother, right?
Oh my gosh. That's our message. Why bother to pay taxes? Don't even do that.
Yeah.
So we finished on a downer note of taxes, but Robbie is dying right now.
Robbie's you two are on the compliance team, and you both are like, shut up, shut up, shut up.
Do not say that. Edit.
Don't listen to her.
Yeah. Robbie, any final parting words on taxes or anything?
No, up in next year. See you next year in the tax season.
See you next year tax season, except for the 20 million people who pushed off until October. So here's what I'll say if you did extend, you still got to pay your taxes. That's a misconception. You pay your taxes even if you're extending your filing. So
yeah.
Victoria, any final words?
No, I just retract my statement about what you should do with that audit.
Yeah, don't pay your taxes. That's fine. We will finish with the final word as always. Dentist Money Summit coming up in June. We'd love to see you. Come hang out with us in Park City. We just had a meeting about this. I'm not just doing this as like a ploy. Truly, seats, like, we literally are starting to fill up. It is amazing how many people are going to come to this thing. We would love to have you. Check it out, dentistmoneysummit.com. That's it for now. As you all know, that's our 2 cents. There's only one thing left to do. Go forth, live your rich life. Till next time. Bye-bye.